Welcome, my name is Vicenteluz with Forex Trading Institute. Please take a couple minutes and go over the following risk disclosure. Lesson number 8, Trading Fibonacci Numbers. Your life as a trader becomes better when you dedicate and commit yourself to become a better trader. And you become a better trader with more knowledge, more education, more practice. You really got to dedicate yourself to this business, and you're going to become a very successful trader. The differences between you becoming successful or not is all in your effort and your dedication on making this a life learning process. Believe it or not, the market is governed by natural laws. The world is governed by natural laws. Okay, Fibonacci, Leonardo da Pisa de Fibonacci discovered a numerical sequence. And he did this by finding this is the sequence he found. 1 plus 1 is 2. Then 1 plus 2 is 3. And what he started finding in the sequence, he started adding up the results. For example, 2 plus 3 gives me 5. 5 plus 8 gives me 13. 13 plus 21 gives me 34. 21 plus 34 gives me 55 until infinity. And Fibonacci discovered that this sequence occurs in nature. For example, rabbits, they reproduce in this sequence. It starts with 1 pair of rabbits, then it goes to 2 pairs, then it jumps to 3 pairs of rabbits, then it jumps to 5 pairs of rabbits, then it goes to 8 pairs of rabbits. So they reproduce in this Fibonacci numerical sequence. Pineapples also grow in this numerical sequence. Look, it has 8 rows spiraling by 13 rows by 21 rows, which these are numbers in the Fibonacci sequence, 8, 13, and 21. Sunflowers also grow in numerical sequence. As you can see here, 55, we have seeds spiraling counterclockwise, and we have 89 rows of seeds spiraling clockwise. And these 55 and 89 are in the numerical sequence. You can also see pine cones. There are 13 parallel rows by 8 parallel rows, which 8 and 13 are also in the numerical sequence. Sneetworth branch also grows. Look, 1 branch, then it goes into 2 branches, then it goes into 1, 2, 3 branches, then it goes into 1, 2, 3, 4, 5 branches, and they grow in a numerical sequence. We also see a piano has a numerical sequence. By 1 octave, has 2 black keys, and a total of 3 white keys, a total of 5 black keys, by a total of 8 white keys, by 13 total keys per octave. And you see the 1, 2, 3, 5, and 13. Now, he also started dividing these numbers, and look what happens when we start dividing them. If I get any number in the sequence, for example, 89 divided by 144, it's going to give me 0.618, or 61%. Look, 144 divided by 233 also gives me that 618. And if I do it backwards, it gives me 1618. If I get 233 divided by 144, then 144 divided by 89, it gives me a 1618. Now, when I jump a number in the sequence, for example, 34 divided by 89, or 89 divided by 233, it's going to give me 0.382, or 38%. When I jump it the other way, 233 divided by 89 gives me 2618. And when I take the square root, okay, of a 618, it gives me 786. And when I take the square root of 1618, it gave him 1.27. Now, when he added 3 numbers in the ratio, and he all did this in a book called Libre Abaci, which is a book of calculations, he found, look, when he added these 3, it gave him 466, he divided by 2, and then he took 233 divided by 466, and it gave him 50%. There was a certain sequence in these numbers. Now, these are the important numbers, and you want to write these down, and you got to memorize these numbers in the Fibonacci numerical sequence. We're going to see how these numbers are going to be very important in your trading career. Now look at the ratios in the life. The reason the pyramids have withstood the test of time is due to the fact that if you get the height and you divide it by the length, they give it a 618. It's a 618. If I take the width and by the height, it gives me 618. There's a reason why you get goosebumps when you play in the piano C and key A. Key C vibrates at 264 vibrations per second. Key A vibrates at 427 vibrations per second. If I get 264 divided by 427, that gives me a 618. That's why the human ear is attracted by the Fibonacci numerical sequence. Look at the Earth. The moon is 0.618 the diameter of the Earth. The cross, they say the human eye is attracted to the crucifix because if you take and you measure this part of the cross and you multiply it by 1618, it's going to give you from here to here. The body is in a perfect Fibonacci sequence. This is something you could do. If you don't believe me, you could see it. If I take the height, if I take from the top of my head to my belly button and I multiply it by 1618, it's going to give me the length from my belly button to my feet. Just like if I get the head, okay, and I multiply 1618, it'll give me from my neck to my belly button. So the human body is in a perfect Fibonacci sequence. They did a study in Discovery Channel, and they showed, and they did models of women and men who they considered to be attractive, and they measured their face, and the people who were considered to be attracted had their eyes perfectly at 382, had their nose perfectly at 50%, and had their mouth at 786. People who weren't attracted, then they got people who the public believed not to be attractive, and their eyes were maybe at 40% or 36%. They weren't at perfect numerical sequence. So the human, what we consider beauty is when it's at Fibonacci numerical sequence. Now look how these numbers apply to the market, and you're going to see that they're very important to the market. Okay, when the market is making, and we're in an uptrend, and the market is making higher highs, we know we had learned on our trends. That's why the first thing we do is do our ABCDs, our support resistance, and we draw our trend lines, and we see that it's making higher highs and higher lows. We're in an uptrend. And you can see it here in this chart, that we're making higher highs and higher lows. We're in an uptrend. Now, this Fibonacci will help us project where the C and where the extension D is going to be. And you want to write this down. You got to memorize these rules. If the market bounces at 382, 50%, or 618, the extension is going to be at 1618. Okay, so it means if it hits any of these support levels, we're going to take our profit near this 1618 or the 162%. Now, if the market bounces, it doesn't bounce on these levels, and it goes all the way to the 786 or near the 79%. Now the market's going to extend itself to 127%. And then there's another number, which is the last place. It's probably the least probability. When it hits the 86, the market has run out of more gas. It's only going to go to the 118%. Now let's look at this, and we get our A to our B. We need to measure, and before we had to measure it physically. Now you're going to see how we could do this automatically on our charting package. And you can see here, if we get our A to our B, okay, if we measure and we throw the Fibonacci and we measure from A to B, it's going to give us our retracements. These levels of Fibonacci retracements are levels of support, and we want to see where they coordinate with the actual levels of support. Now, the market turns around here and it bounces at the 382. It does me a morning star or a tweezer bottom, or an engulfing bullish pattern at any of these three numbers, at the 38, 50%, 618, these are the levels that I got to be looking for a potential bounce. The market's going to extend to 1618 or 162%. Here's where we should be looking for to take our profit. And we also want to look at, that's why we also draw our 4 levels of resistance, and we want to look at where is there a convergence. And the natural movement in the market likes the most, the favorite number of the market is to retrace that 618 and extend to 1618. Retrace 618, extend to 1618. Retrace to 618, go to 1618. And we can see it in the chart here. Look at the market pull back 61%, a little more than 50%, halfway. This was the AB movement. It pulled back to 618 and then extended to 1618. Then the market pulled back again to 618 and then extended again to 1618. Then it pulled back to 618 and then the market extended again to 1618. Now you can see it here. You see the market goes A, B. If it pulls back here 38, 50% or 618, the market wants to go to the 1618. These are hidden levels of support and resistance that if you know this tool, you're going to say, why is the market bouncing there? Because there's a Fibonacci number there. Now let's look at this in the chart. Look how we spread our Fibonacci from A to B, and we start looking at where could it bounce. And these are our 3 levels. Here's the Fibonacci tool on your charting package. If you're using Fibonacci Trader, the one I like to use, you could pull it from A to B. Okay, you're just going to click on this and pull it to A to B, and it's automatically going to give you the numbers. Here it says it's 38%, 50%, 618, and 786, and it's going to tell you the price. For example, it's telling you that the dollar Swiss franc at 133.76 is the 38%. At 133.61 is the 50% retracement. At 133.46 is the 618 retracement. So it automatically gives us these retracement levels. And if we see here, look how it came to the 38%. It gave us a nice bullish engulfing. Now we have to look at our extension at the 1618. Anything above this B is going to be the 1618. Now in your charting package, you're going to see that it only says 618, but it's really the 160%, because this is from 0 to 100. This would be the 161%. When you see that it says 1618, it's really the 261%. We would have taken our first profit. I like to put our profit about 10 to 15 pips below it, just in case it doesn't get exactly to that number, and there take our profit. So here it continued running. It went all the way to the 2618, but we had a nice profit run here. This was about almost 125 pips movement north here. We can see it here, A, B. Okay, the market didn't hit any Fibonacci numbers. It just retraced back. If it does this, then we could either enter buying at a Fibonacci number, and we could see where it converges with pivot points, or where it converges with a support or resistance. Or if the market does less than a 382 bounce, we could buy when it breaks B, the first bullish candle above B. For example, here would have been our first bullish candle above B. Our limit's still at the 1618. Obviously, I like putting it 15 pips below that. And our stop loss, we do it 10 pips below this last low. So we would put it here and we let it run. Look how it had a nice run. So there's 2 ways to enter, either at the break of B or at a Fibonacci number. Now we can see it here. Look how the market did A, B, retraced back to 50%. You see how it hit the 50% mark in the zone. Gave us a little morning star. Then it tested that morning star, and then it started to run. And look how the market did a sub A, B, C, D inside of this big A, B, C, D. And you're going to see when there's a lot of space to run, the market usually gives us 2 opportunities. If you didn't buy here and the market started to run, it pulled back. And if I threw another Fibonacci from this A to B, it most likely would have given a Fibonacci sequence here, and it gave me another bullish engulfing here, and I could have taken this run. A lot of times what I like also to do is move my stop loss from under this area when I bought, and when it does another sub A, I put the stop loss under here, and I already lock in some profit. I put it under this small ABCD, and you're going to see this market's continuing to doing these ABCDs in this Fibonacci numerical sequence. Now you can see here when the market does A, B, and it retraces back all the way to the 786. Now you got to start changing your mentality. The market's not going to run to 1618 or the 162%. It's going to go to 127 because it spent more gas on the way down. It's going to have less gas on the way up, and it's going to move slower on the way up to the 127%. We can see this in this chart. Look how the market did A, B. It pulled back. It hit the 786. And then it started running, and it went all the way to the 127%. So it did it. The A, B pulled back to the 786, and then it went to the 127. We would have put our take profit, our limit. I like putting it 15 pips below. Obviously, we would have had a nice run on this trade. Now, we can project D, and the question is, how do we anticipate C? Past resistance becomes future support at a Fibonacci number. That's a very strong sign. Also, we could look at pivot points, which you're going to learn on a future lesson, which is important, and we want to look at that where they coordinate with a Fibonacci number. The majority of the time, a candlestick formation will appear at a Fibonacci retracement, or if not, it's going to bounce at a pivot point level. And we can see it here. Look how the market did A, B. It pulled back to 618, and it did me a nice bullish engulfing, and then it did another nice bullish engulfing at the 618. Look how it gave me two signs, and you see how 50% of the market, the market tested that bullish engulfing. I like drawing a line in bullish engulfing because those also become levels of support. So if I didn't buy this bullish engulfing, I drew a support line here, and when the market pulled back, I want to buy as near as support. I wouldn't even have waited for that bullish engulfing. I would have bought right at the support and played this as my candle. Because 50% of the time, this market's going to retrace back. And if I bought here, near that support, just when it did that bullish engulfing, I already had almost 45, 50 pips profit, while most traders are waiting for that full formation to get in. And I like these bullish engulfing because they usually give you a second chance with a much better entry point before it starts running to its extension. Look how I did the 618. Your target would have been that 1618. Obviously, this one went all the way to the 2618. Now, the swings, depending if it bounces at a 382, 50%, or a 618, is going to depend the speed. A 382 bounce is the least probability of going to an extension, because most of the time the market wants to look at that 50% or that 618 bounce. But if it does go to an extension, it's the fastest. It's going to bounce and it's going to go fast. And the market starts going slower as it pulls back more, because it loses more gas pulling back. For example, a 786 bounce is a lot slower than to go to its D than a 618 bounce. Now, the two ones with the highest probability, you like to see 50% bounces and 618 bounces rather than a 382 or a 786 bounce. And you always want to check, the market many times rallies to 127%, bounces there and creates a ABCD instead of the CD. And this is very important because I see a lot of traders, this is the AB, they buy at this C, and the market starts rallying, they start looking, this is where the market's going to take them, but the market goes to 27 and they start seeing it pull back, they get scared, they close their positions, and as soon as they close the position, the market starts rallying and goes through their extension. You gotta anticipate that at this 127% is the first level of resistance. I would say about 90% of the time this market doesn't bounces. If I bought here at the C, it's gonna bounce, pull back, give me another C before it goes to extension. You're gonna see most of the time if I pull my Fibonacci from A to B and I look at the extensions and I pull my Fibonacci from this A to B and it gives me the extensions, most of the time they're going to coordinate. For example, a 618 with a 618 or a 127 with a 127, telling me that this is going to be a subswing, and it'll give you a second opportunity to get into the market. Trading is all about understanding price movement against time, and you can see it here. Look how the market did A, B, pulled back to C. Okay, it started running. Look how it hit right at the 2.7, pulled back, and then it gave me another bullish engulfing. You could have got it in here again and riding. Sometimes if I put a lot here, I would add another lot and take it all the way to this profit and move my stop loss from the initial under here to the new C. Okay, you must always keep a track of your A-B boundary. The only way you can apply Fibonacci if you know where the A-B is, so you could pull your Fibonacci. Remember, the market could stay going sideways looking for that Fibonacci number until the bulls take control and take it to a new high. You can see it here. Look how the market did. A-B went sideways. I would have thrown my Fibonacci to see where's the C going to its extension. Now, when we buy, okay, the market, when we buy, the market retraces and hits a trend line at a 618 or 786, we put our protective stop loss at least at the level of A. That's the ideal place. So for example, I'm doing AB, and this is the trend line, and I see a convergence. You always want to see a Fibonacci converge with either a trend line, with a pivot point, with a past support, future resistance, or present support. That's where you're going to get the higher probability. If there's not a convergence, you just don't want to buy a regular 618 number. There's not a convergence. Obviously, the more factors. If I see a pivot point bounce there, I see a Fibonacci number, and I see a trend line, you're taking a high probability trade. Now, if I buy at this C, my ideal place is to place my stop loss below A. Now, you got to measure your equity management to make sure that you could take this trade. See how many pips are from here to here. If you can't take this trade, then you got to wait for a candle formation and place your stop loss based on the rules of the candle formation, 10 pips below the candle formation. Or you could also place it between the 8-6 of Fibonacci and the A. So those are the three places depending on your equity management. And I would say in order, you want to first try to place your stop below A. Then you want to try to place your stop second. If you can't place it there, you want to place it between the 8-6 and A, out of the way of the market. And if not, the last place you want to do is, if you can't take the trade because there's too much risk, then you just place it based on the Fibonacci, on the candlestick rules, candlestick formation rules. Okay. Now you can see here, look how the market did A, B, C. And you bought here, you place your stop loss below A. Now, when you're going to see sometimes the market, if it takes you out here on a subswing, it's most likely going to go and look at another trend line. So there's a bounce here, and if this is the new AB, there's a potential bounce here, and there's a potential bounce here. So that's why if you buy here, you put your stop loss under A. Even if it comes down to this and it goes sideways in here, you're still going to be able to take that ride to the north, because here becomes a strong level of support inside this big AB. And you can see it here. Look how the market did A, B, pulled back near that 618-786 number, and there was a trend line. It gave me a nice morning star. I would have bought. I would have placed my stop loss below A, or I could have placed my stop loss below that morning star. I would have measured 10 pips from this point, and I would have put my stop loss and then taken the ride up north. And these are the rules to trading a Fibonacci uptrend. You draw all your trend lines, inner, outer, and long term. You find your latest AB. You use your Fibonacci tool and spread it from A to B to measure the movement. And you try to find a convergence at C. You want to find a Fibonacci number where it converges with a candle formation or a past support, future resistance, or a trend line, or it could also be a pivot point number. And then your extension, you also want to find a convergence with 4 levels of resistance, pivot point numbers, and the Fibonacci numbers. If there's too much risk, obviously we always follow our equity management. We stay out of the trade. We pull out our trader's checklist and we create a trading plan and we trade that plan. Okay, very important. You got to stick to your plan. You have to have a trading plan. You got to log all your trades. You should get a trading log, print the screen, fill out your trader's checklist, and trade every single trade so you could study what happened on each trade. Now in a downtrend, it's the same thing, just inverse. Look how the market did an A, B, and now it pulls back. We're going to see what percentage does it pull back. 38%, 50%, 618. If it hits, these are resistance levels. If it hits any of these resistance levels, then the next support level is that 1618. The rules apply. If it bounces at 382, 50%, or 618, the extension is going to be 1618. And we can see this in this chart. Look how the market did A, B. It pulled back all the way to the 618. Did me a nice evening star. I would have placed my stop loss above this evening star and my limit at the 1618. Look at the nice ride we had, almost 250 pips on this ride down. That's $2,500 with one standard lot in a day. And you can see if I pull back here, this happened in one day. Okay, in 1, 2, 3, 4, 5 hours. You could have generated $2,500. 2 lots is $5,000. You're going to see how fascinating this business is when you understand it. And look at the market. It did A, B. If the market pulls back to 786, now we change our profit targets to the 127% level. And we can see it here. The market did A, B. If the market pulled back to 786, and look how it hit the 786, it also had a resistance here, past resistance. The new target is the 127%. We would have put our limit, I like putting it 15 pips above. Okay, so if it doesn't hit exactly the 27, we take our profit. You know, we don't want to get greedy for 10, 15 pips and not be able to take our profit in the market retrace, and we give it all back to the market. Now we can see here, A, B, past support becomes future resistance. We can anticipate, how do we anticipate C? At past support, future resistance levels, and the majority of the time it's going to converge with a pivot point. It's going to give me a candlestick formation, and there's going to be a 618 or a 50 or a 382 bounce, and there's where I'm going to get in and ride it all the way to my extension. Look how the market did A, B. It did a 618, gave me an evening star. I would have taken my profit at that above that 1618, 15 pips above. Now, depending on the how aggressive that bounce was, remember the 382 is the fastest to go to the extension. It's the least probability, but the fastest one if it does go to the extension. These are the two best bounces, the higher probability bounces, but they start getting a little slower. They take more time to get to extension, and this is the slowest bounce, where it's going to take longer. It might take a couple of days to get to the extension, depending on what time frame we're seeing. Remember, Fibonacci can be applied on daily charts, 4-hour charts, 60-minute, 50-minute charts. The only thing that's going to change is how many pips we're going to go and look for. And remember, the market many times dips to the 127, bounces, and then it comes back, and then it goes to its extension, and it does what we call the sub A, B, C, D on its route to the big CD. Okay, so you want to be aware at that 127 that the market could put it back and then go to its extension. So if you didn't get in here, most of the time the market gives you a second chance to get in and ride it, and then you could also be canceling and replacing your stop losses. We can see here, we take our tool right here, and we measure from A to B, and we could look that it bounced back. We start waiting, okay, we didn't get a bounce at 382, we got a bounce at 50%. So if we got that bounce at 15%, look how we had a big bearish engulfing. We could have also pulled our pivot point. I'm sure there would have been a pivot point right there. And the market rallied all the way to that 1618 extension. We always want to be in track of that A-B boundary. Okay, the market goes sideways. Okay, they could stay inside that A-B boundary before it goes to that D extension. Look how the market did A, B, it did the C, and then we look at that 127 for that extension. Okay, so if we get A, B, and we get in at C, remember we want to find a convergence where that trend line meets the 618 or the 786. If we see that convergence, we're going to sell at that area, and we put our stop loss above A. Remember, we always want to go in the direction of the trend. That's why A, B, C, Ds and the Fibonacci numbers are going to help you trade always in the direction. You never want to trade. I see a lot of traders try to go from B to C. Going from here, this B to C, you're taking a low probability trade. It's better to be patient, wait for this retracing back to that 618786. I would also like to see a pivot point number or a resistance in a pivot level, and then take it all the way to my D extension. We're going to talk about pivot points in a future lesson. Okay, trading the inner trend line. When we sell right here, we're looking at AB and we're selling, we're going to place our stop loss above A. If not, if the market breaks and takes out my stop loss, the next area we're going to look at, it might do a little Gartley all the way up inside this big AB boundary. So places to look at bouncers are in the inner trend line and the outer trend line. Look at here, the market did AB, pulled back to that 50%, did a nice bounce, did a nice bearish engulfing, and then went all the way to that 1618 right at the trend line. So we would have sold, if I see this trend line and I see a 50%, I put an order here at 50%, I put my stop loss above A, and I let this ride all the way to that 1618. These are the rules to trading a Fibonacci downtrend. We draw all our trend lines, inner, outer, long term. We find our ABCDs. We find our latest AB. Then we find a convergence at C. Where is a Fibonacci number meeting a trend line? Where does it do a candle formation or a past support, future resistance level, or also a pivot level? And then we find our extension, our D extension with 4 levels of support and 4 levels of resistance. If it does not meet our equity management, we stay out of the trade. We always pull out our trader's checklist and we trade that plan. Now look at the Fibonacci. This is real interesting. Look how in nature Fibonacci, this is the river here, does a 786 and then a 1-2 extension. Look at the Rocky Mountains. Okay, you're going to see Fibonacci extensions and retraces in nature. Okay, now this is real interesting. Okay, on September 11, 2001, terrorists attacked America. Even with the chaos around the world at that moment, the currency markets never closed down. The stock market closed down, but the currency markets always stayed open. And the market, as well as the stock market, and as well as the currency market, were still moving in their natural formation. Look at here. This was September 11th. The market did an AAB, pulled back to 50%. This was the dollar versus the Swiss franc, and it did an extension to 1618. Now, this is amazing when you see this, how the market, regarding all this chaos, it was still behaving exactly as it's supposed to, the natural movement that it has. Very few traders know about this Fibonacci and how to apply it correctly. I see a lot of people, they might know about Fibonacci, but they don't know how to apply it correctly to the market. Look at the stock of American Airlines. These are the planes used on Attack of America. And it went ABC, extension. Okay, the stock market also behaved. And you're going to see when you learn technical analysis, you can apply it to all different markets. And look at here, the Dow Jones Industrial Average, which is the top 30 companies in America, also behaved in this perfect numerical sequence. 618, 1618, 618, 1618. The S&P 500 were the top 500 companies in America. This index, it started doing that A, B, C, 618, 1618. Then it did a pullback, and then it went to its extension. Okay, my name is Vicenteluz with Forex Trading Institute, and I'll see you at the next level, next lesson.